In this video, we are going to talk about 12 personal finance facts you did not learn in school. So before starting this video, please like this video, and subscribe to our channel for the future updates. They'll teach you all the algebra you can handle in school. Geometry and trigonometry will be taught to you. They might even try to teach you calculus. They don't, however, teach you anything about money. No way, sir. All the differential equations in the world won't teach you how to manage your finances like a responsible adult. Despite our schooling, we have a very low level of financial literacy. In fact, only roughly a third of states in the United States mandate high school students to take a personal finance course. Do you find personal finance intimidating? Many people believe that their school did not adequately teach them about it. Learning these 12 crucial facts is a great place to begin. You'll never truly learn how to manage your money or make wise financial decisions if you don't start now. Personal finance is a subject that many people are unfamiliar with. Personal finance, on the other hand, is something that everyone should be aware of because it affects every part of one's life. Here are the 12 personal finance facts you did not learn in school. So let's start. Number 12. The average person spends 12 to 18% more when using credit cards. When paying with a credit card, people spend 12–18% more than when paying with cash. This is due to the fact that people believe they are receiving free money, and hence do not consider what they are spending their money on. To avoid overspending, keep cash or a digital wallet on you at all times so that if you have an impulsive purchase, you may pay for it with cash and get back to your routine. Number 11. Do you know what interest rate you're paying? In fact, more than half of millennials are unaware of the interest rate they are paying on their credit cards, and interest rates can vary significantly from one bank to another. The truth is that if you don't pay attention, your credit card company could be charging you interest rates of up to 29% on an annual basis for carrying a balance on your card. If you want to avoid this, do some research on the interest rates that different banks are providing before applying. You may save thousands of dollars this way. Number 10. 33% of college students have made a late payment on a credit card. Even though making a late payment is never enjoyable, 33% of college students have had to do just that. However, if you find yourself in this circumstance and do not wish to pay the late fee, there are alternative choices accessible to you, such as making an online payment through your bank's website or setting up automatic payments through your credit card provider. Number 9. Paying the minimum required balance will get you nowhere. Depending on your perspective, paying the bare minimum required balance on your credit card statement every month is a positive thing to do. However, in actuality, it will just exacerbate the situation further. The interest rate charged is barely covered by the minimum payments, and if you don't make a larger payment each month, you'll never be able to get out of debt on your own. Number 8. Track your credit score to make sure it's good. Your credit score is one of the most important components of your personal financial life and should not be overlooked. Track it on a regular basis to ensure that it remains healthy, and figure out how much you can spend before applying for a loan or trying to rent an apartment so that there are no surprises. Number 7. Stocks provide a 10% rate of return over time. If you're seeking for a safe and profitable investment, stocks may be the way to proceed. People like to talk about how great the risk is and how they can't afford to lose their money, although equities have historically provided rates of return of roughly 10% over time, according to the S&P 500. There are few other investments that are growing at the same rate as this one. Number 6. Debt isn't inherently bad. Having debt isn't always a terrible thing, it all depends on how you manage it. You can consider putting your money in a high-interest savings account instead, because the return you earn will likely outweigh the danger of defaulting on your loan. But if you borrow to purchase something that depreciates quickly and is difficult to sell, such as art or jewelry, there is no doubt regarding whether or not borrowing is a sensible decision. Number 5. Do you know the rule of 72? The rule of 72 inches is important because it can help you predict how long it will take for you to double your initial investment to be worth twice as much. Simple math will tell you how much your investment will grow over time. Divide the number 72 by the rate at which your money grows, which should correlate to compound interest, and you'll have an idea of how much your investment will grow. Number 4. Budgeting is crucial for your financial success. Even though we are all aware that sticking to a budget is difficult when circumstances are tight, the fact of the matter is that if you don't have a plan in place for how much money you spend each month and where it should go, you are more likely to overspend. Budgeting also helps to ensure that you are not living paycheck to paycheck, as is the case for many people. Number 3. Wealth doesn't equate a huge salary. Some people create wealth by owning their own home, living below their means, and putting aside as much money as they can, all while earning earnings that are less than 6 figures per year. Number 2. Saving isn't investing. We've all heard the phrase, saving is good, but if you're not investing, you're passing up a potential to see your money increase over time. Saving money can help you establish an emergency fund and provide a safety net in the event of an unforeseen event, such as losing your job, but investing will allow your money to grow. Don't get too downhearted if you don't have any investments. Simply change your strategy such that you have both. Number 1. Direct deposits can save you money. There's no need to go to the bank every time you get paid, or even to wait until your bi-weekly paycheck is deposited. Simply enroll in direct deposit and everything will be taken care of automatically. What do you think of our list? Which thing do you like from above list? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.